Well, let's get across the market open now. Zach Riaz joining us from Banyan Tree Investment Management. Zach, welcome back to you. Of course, focus very much on that memorandum of understanding between the US and Iran to end the war and reopen the Strait of Hormuz. Comes at a critical time this week with a number of central bank meetings, including the Fed.
Yeah, good morning, Andrew. Lots happening, obviously, which kicked off with MOU. I'm not sure if it will be a MOU or MOM, a memorandum of miscommunication. Well, let's see how it all pans out. But look, it's positive. I think the war itself is becoming a fatiguing issue for a lot of the parties involved. I think Donald Trump definitely wants a resolution, and so let's see if it holds. I mean, there's a lot of time between now and I think the end of the week when they sign it. But early signs are good. And look, we've been pretty sort of skeptical of every deal that's been announced to date. And to be fair, that's probably been the right call, because I think there's been about 6-7 ceasefire deals. But I feel like this one has a little bit more legs. That's one part. And then if I look at our sort of technical charts that we look at, some of the guys that we rely on, we've always said first half, second half story, and first half was always going to be volatile. And the data, which has no emotions, which takes no sides, told us at the start of this year that you weren't going to have a clean run at the start of this year, but the second half will be different. So this MOU could be coming at the right time for all those chartists that we listen to. So all else being equal, we have been underweight from an asset allocation point of view. We've been very underweight risk assets, and I think with this latest announcement, we're starting to close that, but it's not still off to the races completely.
So, Zach, if you're seeing gold obviously benefit from the end of the war, then stock-wise, what are you looking at?
Yeah, within gold, we like the precious metal now, especially. We did forecast, Andrew, that it will decline in the first half this year, fell below its 200-day moving average, but I think it's going to start to find a floor because the macro picture is now changing. Within gold, we do obviously like Northern Star Minerals. We like Evolution Mining, even Newmont. And so we've started to move back into gold, which we took some profits on. Still got some position there, but took some profits on. And we moved into a broader commodities complex, but we're now reversing some of that trade as obviously, hopefully the Middle East tensions settle and supply chains normalize. So we're seeing some real opportunity there. And then sort of back to sort of global cyclicals and whatnot. But the one thing we're still very much focused on, despite the Middle East tensions hopefully coming to an end, is that I think the inflation story hasn't definitely, it's not in the rearview mirror from our perspective.
So let's stick with commodities then. So gold, seeing the opportunities there. What about copper, given how far that has run? And obviously we're seeing tremendous demand globally at the moment.
Yeah, look, I think copper is a commodity you need to have some exposure to. There's obviously long-term structural demands driving copper. There's a lot of narrative, Andrew, out there about how quickly you can find new copper, the ramp up. I can tell you, I've spoken to so many different people, industry experts, and there's one side of the spectrum that this is a 10-year process, and we are really looking at a supply deficit. And then there's other side of that spectrum where industry experts are saying, no, there's demand coming online, so I wouldn't worry too much. But regardless of that, Capstone Copper is one that we like in the mid cap space, and obviously the large cap guys also have some copper exposure. So I think copper is something you need to have some exposure to because it is both short-term and long-term trends are positive for it.
Now, Zach, of course, we've got the RBA meeting today. Expectations rates are going to remain on hold. Nonetheless, we've seen 3 rate hikes in a row. That has certainly hit the property sector, combined obviously with what we've heard out of the budget. Are you seeing any opportunity in the property play at the moment?
Yeah, look, 2 points on that, Andrew. So within the property play, we like James Hardie, which obviously more 80% of its earnings come from the US market. We think the US market, which has obviously been on struggle street with the consumer and rising interest rates. But we like James Hardy more for the US space. But yeah, to your point about the budget being really sort of heavy on the consumer consumption side, and obviously the changes around property and whatnot, which is going to obviously have an impact on consumption because property is one of your biggest assets, the negative wealth effect. But on the flip side, we do like the capital expenditure announcements and provisions in the budget. So there's going to be a lot of spending around critical minerals. There's obviously defense spending, housing. There's also critical infrastructure. So we like potential engineering companies that are potentially exposed to industrial companies that are exposed to the thematic. So SCG with the old Seven Group. And then obviously there's a couple of other names. Venetia is another one, VNT, I believe the code is. So there's other ways to play the budget as well. But clearly property is going to be on the nose. And so stocks like REA, which are looking pretty good value, even PEXA, are probably going to struggle to find a clear runway whilst we're still navigating through how does this whole capital gains tax issue finally rests.
I see you're also looking at Telstra. Why is that?
Yeah, look, I think there's been a lot of conversations around, obviously Telstra is a great company. A lot of people in Australia look at Telstra as a defensive play. But the reason why we like Telstra is for the towers business, that telecommunications infrastructure. And so there's much more cleaner plays globally. But when you look at Telstra, when you look at obviously the proliferation of AI, cloud, and then Starlink. So there's a narrative out there, Starlink will come out and eat a lot of the lunch of these telecommunications companies. But you've seen Starlink, whilst as good as it is, and it will increase the coverage on those hard to reach areas, it still needs the bandwidth. And it's actually doing deals with some of the tower companies to increase its bandwidth and its obviously reach. So we feel those towers business, those telecommunications towers business is going to be an attractive proposition going forward. So Telstra in Australia is one way to play that.